Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 9th of June. It is the Federal Reserve today. Monetary policy decision on the Fed is going to be crucial, I think, for markets in a near-term basis at least. I think that what we've seen is that the risk rally that we've had has been uncertain, to say the least, in the last few sessions. We've seen the S&P 500 closing lower last night, nothing too decisively lower, but it's interesting that we saw futures which were looking to move higher today, which have come back to flat on the S&P 500 again, and we've seen that European markets have fallen over a little bit this morning. There's a degree of caution as to exactly what the Fed is going to do. My take on it would be that if the Fed starts to sort of hint at sort of less dovish monetary policy, I think that could really start to see some profit taking in this risk recovery, which has gone so far. Now, the key will be how that impacts on the dollar. So far, with the yields coming back lower, the dollar has really struggled in the last couple of days, falling away again, despite that huge non-farm payrolls data on Friday. We've seen the dollar index closing lower in the last 2 days and still lower again today. So the risk recovery is one thing, how that performs, but also how the dollar performs if on the back of the Fed as well. Now, today we've got the dollar actually lower against everything. It's actually underperforming against everything. But there's a spread of risk appetite, isn't there? Yen is strong, but also Aussie and Kiwi are strong. So there's no real sort of decisive shift there in sentiment. Gold and silver basically holding ground. Interesting move on gold in the last couple of days on a rally, but can that rally continue? Look at this move on oil price, 2 to 2.5% lower on the oil price. We've seen just sort of hints of rolling over, just consolidation at the moment, and oil has consistently gone through these consolidation phases. Certainly this Brent crude has had these moments throughout the recovery where the market looks as though it's sort of losing its way, but then starts to break out again. So we're having another one of those phases at the moment on oil. But can that continue to move higher would be the question. But really interesting move set up ahead of this Federal Reserve meeting today. In terms of data points today, we do have the US inflation numbers at 130. CPI inflation is not the Fed's preferred gauge, but certainly is an interesting one. CPI expected to drop down to 1.3% on the core data from 1.4 and down to 0.2% from 0.3 on the headline. Let me just quickly show you that data on charts. Look at this line here. That was average hourly earnings. I'd be ignoring that at the moment. That is just a statistical anomaly considering the number of jobs that have been lost. Inflation is more of a worry, falling quite sharply. Look at that headline. It's the lowest since 2015 at the moment. On the core basis, 1.4 is expected to come down to 1.3. It hasn't been, well, that's, yeah, I mean, multi-year lows. So really interesting decline in inflation. The Fed still needs to see inflation driving higher, and it's not doing that. So maybe that, well, there's reason for the Fed to certainly still be cautious, but how cautious will it remain? So that takes me on to my chart of the day, which is the Australian dollar versus the yen. Now, I always take Aussie yen as a really important risk gauge. Obviously, the safe haven yen and the high risk Aussie paired together or crossed together really does give a good gauge of risk appetite. We've seen that rolling over in the last couple of days, this Aussie yen. Back to 74.50. This was the old February breakout level. It's held that. 74.50. That has held. And on the hourly chart, you can actually see sort of seems to be building into a possible top pattern. So that is a concern. So a breakdown below 74.40 on the hourly chart would complete that top pattern, actually imply around about 225 pips of downside move, and that would be sort of 72.25 area, which is not a massive correction, is it? I mean, considering it was only back to, that's the beginning of last week, so we could easily see an unwinding move. That uptrend at the moment on Aussie yen comes in around 71 figure mark. So there is big room for a corrective move. And look at stochastics falling over, RSI threatening as well. So this is more of a corrective setup also on the hourly chart as well. Resistance initially 75.25, 75.30 in the last couple of days. And it just looks as though this market is beginning to turn a little bit more corrective. So how Aussie yen and risk appetite comes out of the Federal Reserve meeting tonight will, I think, be a key gauge. A closing move below 74.50 really does complete that top pattern effectively and implies a corrective move lower, which there's not a great deal of support until you get to that 72 sort of figure mark, really. And yeah, we could see that move. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and click to watch Trader Talks, where you can gain some top trading ideas.